Welcome, this is BloombergQuint. We are taking stock of IIFL Finance's earnings. Well, there has been a little bit of a decline on revenues, and of course, we've seen that impact play through on account of the COVID-19 outbreak. Let's take a deeper look at how the quarter's gone by has been and what we can expect going forward. We're in conversation with the CEO of the company, Sumit Bali. Sumit, good afternoon, and thanks for taking the time out. Let me begin by asking you about your assessment of the quarter and all the various aspects that you can talk about to us right now.
Good afternoon, and thank you for having me on the show. So this quarter had a fair bit of ups and downs. So when we started the quarter, we came out with a maiden bond on MTN bond where we raised $400 million. So that was a very good initiative in terms of diversifying liability and also raising a large amount of loans. Subsequently to that, the momentum was good, but the last 10 days of March, post-lockdown, everything slowed down. And since the lockdown has got extended, so it's been a complete stoppage of economic activity and not much is happening, hardly anything is happening on the loan side. About 58% of our customers have applied for moratorium. So it's been a challenging time for the past 2 months since the lockdown began. But we are hopeful that as and when the government initiatives and measures flow through the system and reach the end customers, things will start looking up.
All right, Sumit, you've taken provisions worth 282 crores towards COVID-19 impact on financials, if I'm not mistaken. Please do correct me if I'm wrong. What are you considering, and is there a chance that after the quarter, that is after seeing April and May numbers, that you could likely see a little more provisioning come in on account of this?
We've taken 282 crore, that's right. We did do a deep analysis on our portfolio, and we also retested it post the extension of moratorium. So as per us, I think it's sufficient. But yes, this has some bit of assumptions in it going forward. But as of now, we do think these are adequate provisions.
All right. Can you also tell us a little more about your home loans? It's the biggest part of your AUM, of course. And on expected lines, there has been muted growth out there. But could that be a problem factor now going forward, considering we've seen that industry completely be on a standstill for this particular quarter?
So we are very active on the affordable home loan category. So that's where most of our AUM is. And that sector is relatively lesser affected. It's not correct to say it's unaffected, but relatively lesser affected. And given the recent guidelines where the area of qualification for affordable home loan has increased, we do expect that business to come back to near normal over the next 2 quarters.
Right. Sumit, what I'm also observing is that about 90% of your gold loan segment is under moratorium, and nearly 100%, 98% to be precise, of your microfinance part is also under moratorium. Can you give us an outlook on both these segments as far as the next couple of quarters go?
You see, so gold loan, we are very comfortable. We are now operating close to about 80% of our branches. In fact, the gold prices have gone up. So LTV inherently is now at a historic low of close to about 60%. It's a very granular business of about 50,000 odd ticket size. So we are pretty confident that as and when the economic activity resumes, customers move out of the houses, this will come back to normalcy in the next quarter. Microfinance is unsecured, very interesting business. So my take on that business is I think this is a segment of customers which are very resilient. So like us, if you lend for income generation activities to the rural segment, these customer segments are relatively lesser affected from what we see among the set of customers. And we've seen them bounce back through typhoons, floods, cyclones, etc. And I'm sure this segment will be back again to normalcy in the next 3 to 5 months.
We also want your view on business loans because, please, there are all sorts of, guesses in the markets that it's mostly on a standstill. I'm not talking about IIFL Finance specifically, but as the industry as a whole, because of the lockdown. What is your reading on ground at this point in time? How can it affect the ongoing quarter, and when can we expect recovery in this specific segment?
See, business loans and MSME loans by definition are loans taken for income generation activities. Though we assess the cash flows, but we do it based on what we see in the past. Going forward, this 2 or 2.5 months of lockdown is certainly likely to impact the operations as they restart. And some of these segment of customers will even require more liquidity. So my sense is there will be some amount of pain in this segment. Roughly 65% of book is secured in terms of loan, that's the loan against property. The rest, which is unsecured, there is a higher interest margin to take care. And I think importantly, the 3 lakh crore package which the government has come out with to benefit the end customers on the MSME side, once that money finds its way with the end customers, things will start easing out a bit. And I think the biggest benefit would be the starting to lifting of the lockdown so that the journey towards normalization would start.
Okay, Sumit, we leave it at that. Thank you so much for joining us and taking us through the outlook for the company. We wish you the best for the future.
Thank you. All the best. And stay safe. Thanks.